Welcome to Share Talk. Today I have the pleasure of speaking with Coughlan, who is the Managing Director of European Metal Holdings Limited. How are you today?
I'm well, thank you, Steve. How are you?
I'm not too bad. Thank you for taking the time to speak to us. It's been a very interesting sort of year for yourself. So first of all, congratulations on everything that's happened.
Thank you.
Right, you had some interesting news out on Friday in relation to the drilling results. Would you like to talk further about them, please?
Certainly, Steve. We did have some further interesting drill results. All of the drill results we've had from this last program have been very good. They've either confirmed or, in many cases, exceeded our expectations, both in terms of grade and in terms of the width of the mineralisation of lithium in a Cinovec deposit. So the drill program has been very successful, and it served a couple of purposes. Firstly, it's allowed us to confirm the very large amount of historical data we've had from the historical drilling, and it's also allowed us to gain great confidence in the deposit and allow us to increase the indicated resource under JORC that we announced one upgrade to in November, and we'll be announcing another one fairly shortly on the back of the completion of this drilling program. So when we bought the project, all of the resource was only in the inferred category, and a large part of what we've been doing is to bring that up the JORC curve and increase the confidence in the deposit.
So in relation to obviously the RNS, a lot of private investors will look at it and just see it as a lot of holes and a lot of information there. Could you sort of collate it into a easier to manage sort of summary for us, if possible, please?
Certainly, no problem. Well, I think the best way to understand that, Steve, is that the three reasons why we consider Cinovec to be a world-class lithium deposit. Firstly is its size, secondly is the projected cost of production, and thirdly is its location in the middle of Europe. So firstly, this drilling program serves to confirm what we've said about the size of the deposit. It's a very, very large lithium resource. It's also a very large tin resource, but if we focus on the lithium for the moment, it is the largest lithium resource in Europe. It's somewhere in the vicinity of the fourth largest non-brine lithium resource in the world. And that's very important with regards to what's happening in the lithium space and with the lithium space in Europe in particular, which I'll talk about in a moment. To get an idea of the size of the resource, so the deposit is about 2 kilometres long, about 1 kilometre wide, and as you'll see from that RNS from Friday, we have continuous mineralisation as long as 360 metres, and that's almost from surface. So if you extrapolate that, you get some idea about just how big this resource is. And that's important because the lithium space is indicating to us globally that there is not going to be enough supply to meet the demand, certainly out to probably 2030. And having a resource as large as Cinovec, right in the middle of Europe, where you have all of the major car manufacturers enunciating very clear and very large EV strategies going forward, they are going to need a lot of lithium. Even Volvo joined the party last week, made an announcement with regards to their plans to produce over 1 million EVs by 2025.
You obviously touched on the fact that you've got tin there, and obviously from your RNS you've got tungsten in place as well. Can you tell us how that would fit in with the overall mine strategy and the plan going forward, please?
Certainly, Steve. Well, yes, the tin in particular is very important to us going forward. From the last study we did, which was the scoping study over a year ago, the tin revenue in the scoping study was in excess of $90 million US a year. So, yes, it's a significant co-product for us. Mine strategy, and that's quite interesting because part of the deposit has already been mined for tin, so obviously there's less tin remaining in that area, but that coincides with the area of higher grade and shallower lithium. And in the other part of the deposit, it hasn't been mined of tin, but the tin has been proven up there. So we can basically, from a strategy point of view, we can mine the higher grade lithium area with less tin, or we mine the area and blend our product from a strategy point of view, depending upon the relative metal prices. But in any effect, the tin is important to us going forward. The tungsten also, to a lesser degree, and potash also, we produce significant amounts of potash out of the process as well. Now, when we take all of those byproduct credits into consideration, we strongly believe that we'll be bottom quartile from a global cost production curve, and that's exactly where we want to be. With the publication of our PFS, which should complete about the end of March, and we'll release it shortly thereafter.
So obviously now the drilling campaign is done and you're expecting that to come out in March. What other sort of news flow are you expecting going forwards?
Well, firstly, we'll have the resource upgrade that I alluded to earlier, which is the culmination of the drilling campaign. I hope to be able to get that out to the market within the next, say, week or two. And, we're looking forward to a continuation of the very good announcement we put out with regards to the previous resource upgrade in November. Following on from that, there will be various elements of the study and some of the metallurgical test work that we'll be able to release ahead of the study, but it will all culminate in the publication of the PFS for the end of March, released, say, early in April, I believe.
And what are the sort of longer term plans?
Well, we believe that the for us to move straight into a DFS. The plan will be to roll straight into that and to complete that by the end of calendar 17, by which time, all things being equal, we'd like to think that we can move into construction finance and get this project up and running.
So very much a fast track to production.
Well, we'd like to move as quickly as we can, but obviously within the confines of doing everything absolutely properly. But the way that the lithium market is as soon as possible is definitely important.
Excellent, Keith. Is there anything further you would like to add?
It's an interesting program. Our team has been very busy for this last year, putting it all together, and have done very, very well. We've achieved a lot over the last 12 months, but it feels like there's still a lot to go and a long way to go. It's good to see the market starting to recognise that and starting to re-rate us. We're getting, we have had a good run on our share price in the last few weeks, but really, if you compare that with our peers, we're really just starting to get back into the sort of valuation where I believe we should have been for some time.
Okay, Keith. Thank you very much for your time today. It's been a pleasure speaking with you, and look forward to seeing you soon.
Thank you, Steve. A pleasure always.